caught up with the CFO Suhas Prabhu on the performance and the way forward for the company. Let's listen into the slice of that conversation.
Very strong start to quarter one with 40% year-on-year growth on the revenues and a broad-based growth with our customers crossing 100 active customers, and our revenue per employee also trending north of 77%. But as you also pointed out, the margins are stable and resilient with EBITDA at 16.9%. But what we would like to highlight is that we have a path to moving towards the 19 to 20% range that we have performed at in the past. There are two factors. One, investments that we did ahead of the curve that we alluded to 2 quarters earlier, which has impacted about 150 bips or 1.5%. And the second is the ramp up of new engagements, strategic engagements such as Tectonic and omni-channel engagement, one of our largest deals that we signed up in the recent past, which have gone live, where the costs are already getting incurred, but the revenues are getting deferred to quarter 3 of the current fiscal year. So we believe that quarter 3 and quarter 4 is where our margins at a EBITDA level would be back in that 19 to 20% range.
Got that, Mr. Prabhu. Thank you for clarifying on the EBITDA front. But on your PAT as well, your PAT just grew at 13% while your revenues almost grew at 40%. And you earlier said that you're guided for a significant upward movement in PAT through FY27. So tell us if that margin trajectory, that PAT margin trajectory is still intact, and what's your updated timeline on that?
Yes, the PAT sequentially has grown by 300 basis points, so 3% to 10.9%. And this is also going to grow in the line with the growth in EBITDA. And more significantly, the inflection in EBITDA that we see in quarter 3 and quarter 4 will also see a significant positive movement on the PAT. Though I would like to also remind of one factor, which is the non-cash charge, given the large acquisition that we did in quarter 3 of last year, will continue to have a higher amortization charge, which is a non-cash charge, impacting PAT by about 1.5% against historic levels, which was in the 14.5% levels.
All right, that's wonderful. Let's touch base upon your revenue per employee. That has crossed over $77,000. And you've said that this is also the highest among your peer group. Can you tell us how you're achieving this? And is there an AI aspect to this?
Yes, and thanks for highlighting that. And this is something that we have been continually tracking internally. And if we look at the trajectory since listing, we were in the vicinity of $55,000 to $60,000. Last quarter, $75,000, and now $77,000. There are two factors. Yes, Gen AI is certainly one of them. But more importantly, is also our engagement model, which is outcome and output-based models in our contracts with customers, where we get paid for output and outcome. And the impact of Gen AI, therefore, is able to be retained and strengthened by Indegene and doesn't get passed on in the form of a lower billing, because we are not charging on effort or time and material basis in our engagements.
Got that. You also mentioned that healthcare domain experts now make up almost 30% of your delivery workspace. So how does that shift in workforce composition tie into your margin recovery story for the second half of the year?
I would say that's a conscious effort. As Gen AI is impacting all of us, there are certain tasks such as coding and programming and the like, which are getting more and more automated using Gen AI. But what is needed to deliver the outcomes that our customers are looking for is the deep domain contextualized for the life science industry. And that is why we are seeing a continuous shift over the last 4 years. Our domain layer, which is the medical domain layer, has increased from 22% to 29% of our workforce. And this provides us the edge in the marketplace as we go deeper and more upstream with our customers. And this is also going to have a impact on not just the margins, but also on superior growth as we go ahead.
All right, understood. And tell us about BioPharm. In the last quarter, you said that G&A synergies were expected to start showing from this quarter, and you're also expecting further synergies to come in for the rest of the year. So how have those synergies started to flow through in the first quarter, and are they still on the timeline that you'd originally laid out for us?
Yes, BioPharm has been a very good acquisition. It has integrated well with our campaign and omni-channel business, which is part of the enterprise commercial segment at Indegene. While this segment and the revenues continue to grow, as you rightly said, the synergies from that have also started reflecting. The G&A integration is complete, and we've realized some synergies there. But going forward, we are also looking at synergies on the technology and data front as we bring together the platforms and the data sets of both Indegene and BioPharm together and go to market. And as we scale, there will be further operating leverage coming out of the operations of the omni-channel business with which BioPharm has integrated.
Got that. You'd also spoken about Tectonic now scaling to 5 customers, with the Germany engagement with your largest client seen as a catalyst for the full year FY27. Can you give us an update on how the Tectonic progress has been in the quarter gone by, and whether that largest customer relationship is also moving forward as per plans?
Yes. So in the last quarter, we signed up for the German region with our largest customer for the upstream Tectonic scope of business. While the engagement go live got deferred and was off to a slower start than what we anticipated, what is promising is that we signed up with the same customer for a new region, the Spanish hub, in the current quarter. And both of these, the German engagement has already kicked off, though delayed, and the Spanish one is expected to kick off in the current quarter. And that shows that not just the promise of the engagement, but also the conviction of the customer to take this further and deeper within their organization.